All right, well, good afternoon, Checkmate crew. It is 5:30 in the evening here in New York City. It is after closing of the New York Stock Exchange. Today is Monday, actually, March 6, 2023. I know this is kind of off schedule, but, you know, with my schedule changes recently, it's kind of hard to commit to a certain time. I'm going to try to stay committed to doing at least 3 airings a week. And so just in case if tomorrow gets a little bit hectic, I'm doing one tonight, all right? For those of you who joined recently, welcome. We talk about stock trading and options, futures, commodities, and other financial instruments, forex, cryptos. We also do a little bit of sports betting as well too. So we're going to cover all of that today in this episode as well too. All right, so let's get started. Let's get started with the markets. S&P 500 had an interesting day today. We saw in the SPX on the daily chart, this is the potential start of a evening star. Now, you guys who have followed me for a while, you guys know that I really don't like chart formations that much, but because usually most chart formations are taken out of context, all right? But I think with the context of our market internal data, this actually tells a lot. If we see a gap down and we see a fall and a big decline tomorrow, this would complete the evening star formation, all right? And usually that's considered a bearish signal. And here's the reason why I'm even bringing this up. It's because if we actually look at the market internals data, which is our junk bonds advanced decline line and our New York Stock Exchange high-low line, we have actually noticed, at least not on the New York Stock Exchange high-low line, but at least in the junk bonds advanced decline line, we've actually been seeing lots of declines. In the past 20 sessions, I believe we've had 17 declines and only 3 advances. All right, and so we had one advance on Friday, and some of you guys DM'd me, oh, is this time to buy the dip? Is this time to go long? I don't think so, and especially if you're a swing trader. Of course, if you're a long-term investor, you should be dollar cost averaging into something like SPY or the triple Q or something like that, for the rest of your life. But for those of you who are doing medium to short-term trading, you should be mindful of the fact that the credit markets, the corporate credit markets, are showing some weakness. All right, and what we're wanting to see for us to buy the dip is that we want to see this trend reverse and make a higher low, okay? We're not there yet. One day does not change a trend, okay? So what we want to see is 4 days in a row of advances over declines, and we just haven't seen that yet, okay? So until we see that, no go, all right? And I do think that actually this is in anticipation of the debt ceiling issue. I've been saying this for like a few. Fund all the money that they spent in those retirement funds. They're going to have to issue bonds, and then they're going to have to issue more to fund future obligations. So there's going to be a big supply of treasuries that rush into the market after the debt ceiling gets raised, probably within about 3 days after raising that debt ceiling. So when that happens, there's going to be a huge supply of long-term treasury bonds, which means, boom, TNX and all those treasury yields are going to spike, okay? So bond prices and interest rates are inversely correlated to one another. When bond prices go up, interest rates go down. When bond prices go down, interest rates go up. So when we see that TNX spike up in April, I think we're going to see, all right, we're probably going to see risk assets take a hit around that time. Now, whether or not that's the continuation of this secular bear market or if it's just a correction, that is going to be dependent on what our junk bonds advanced decline line says, and at the same time what the New York Stock Exchange high-low line is saying. The New York Stock Exchange high-low line is actually still going up. So we're seeing a little bit of a data divergence. That's why I'm giving it 2 to 3 odds. I'm giving the higher chance of this April whatever event to be just a correction. Okay, as long as this keeps going up and as long as our junk bonds ADL, our advanced decline line, makes that higher low, I think it's going to be a correction to buy into. And again, I think this rolling bull market is going to continue until October, November, or end of 2023, early 2024. We talked about that at the end of the year episode of 2022, that last episode of December. We talked about that thesis. I still think that thesis is still valid, and we're going to. I think we're going to see that rolling bull market for 5 or 6 months. And then that's when we could see a possibility of a bigger recession, or whatever you want to call it, a bigger risk event with emerging market solvency issues. Okay. But that's, I think, still a ways away. These kinds of things take time to manifest. They take months, possibly even up to a year to manifest. Okay. So, so look out for that. We'll take this day by day, and again, it really just depends on the data that we see. But again, our junk bonds ADL line is still on a downward trend in the short term, medium term. We want to see that curl up before we call any bottoms or anything like that. Okay, so that's that. What else is on the agenda today? I also want to talk about one of our trades we've been trying to get into, which is Mosaic. But before I get into that, let's talk about some commodities, because commodities are involved in that. Let's talk first about crude oil. Crude oil is now over $80 a barrel, the West Texas Intermediate. We saw a big drawdown actually earlier today, but then magically it kind of reversed. So I don't know what if it was news driven or what. I haven't been able to check yet, but these are really big candles here that it went down but then went back up. So there must be some type of buying demand happening. I'll have to take a look at the order flows. I haven't had a chance to do that, but this could be interesting. We could see, is this going to make a big move? We talked about this last week, that oil was going to make a big move. It was just a matter of which way. And I was saying that most likely up. And here we go. Maybe this is the start of that. It could be. So I'm now looking over CPG and all these names that we wanted to get into, like these oil names, even CVX. I mean, I might even, I might just go with leaps on Chevron. I think Chevron could easily get into the 200 sometime next year. So maybe some in-the-money leaps. That might not be a bad idea, actually. We got June 2025s already available. 3 to 1 would be around $50, $55. So if we can get something at 55, I mean, wow, that gets us down into Delta 70s already. I mean, we can get 4 to 1 leverage actually on the 140s. That doesn't seem so bad. So that's oil. CPG is another candidate that we've been looking at. If I do CPG, I'll definitely be buying shares of CPG. I think this is a good one too to get into if we're going long on oil. I still haven't made up my mind yet. I'll make a decision as we get closer and closer to that trade decision. I do think that at least we might see some volatility, at least in the next week or two, in commodities. But that's just my opinion. But 239 or so. For those of you who want to get long natural gas producers, that may be a good entry point right there. And we've been talking about some natural gas plays like Antero Resources. This might be an interesting one to get into. If we see that big drawdown, we might, if it gets to around 230, 240 zone nat gas, we might see Antero Resources getting down to around $24, $25, which in that case, I think that would be a great buy for Antero Resources. Of course, there's also LNG, which is Cheniere. I know some of you guys are in this. Cheniere might drop down to around, let's say, around 145 to 150 or so. Let's say 152 to 150. That might also be a very interesting buy as well too. I know some of you guys, some of our members are in this already. It may be a good time to maybe load up a little bit more shares if you still have got some buying power, or maybe cover some of your covered calls. Not a bad idea to do that. So again, I'm trying to get into that as well. Speaking of natural gas, you guys know what my natural gas play is. It's a fertilizers, urea-based fertilizers, which MOS makes. MOS has been on a tear. I mean, wow, talk about like missing the train on this one. But I do think still, this one is also kind of like S&P 500. It's kind of making this evening star, is it not? Actually, that kind of looks very similar. It's like the S&P 500 is 1 day behind. Similar. It's like the S&P 500 is 1 day behind. That's interesting. Very interesting. I just noticed that actually. Huh. Interesting. I don't know. I don't know what to make of this. This looks like a evening star already. Well, no, it does not, because evening star, you want the wick on top to be larger. So I don't think this is a very clean evening star. Probably not, but it's very interesting how this is kind of mirroring, but 1 day ahead of SPY. Maybe it's just a coincidence. I don't know. But anyway, if we see that natural gas fall down to 230, 240, I mean, this might pull back a little bit. I mean, I'd really like to get it under 50. I don't know if we're going to get there. Okay. I don't know if we're going to get there. It may stop at 51, 52 or so. All right. But that would be a buying event right there. I'd like to get it a little bit lower. I missed the train on this and it just kind of just flew out of control. But these are my buy levels, 49.90, 47.50. I have alerts there. I'm going to be buying at both those levels. That's my plan right now. But again, I might raise this. And also it's just going to depend on market internals. But this is another name that I'm trying to get involved with. What else here? So let's also take a look at some of our Forex currencies and the things that we look at to look at market health. We've got, what's going on here? So many lines. Got to get rid of these. Got to get rid of that. Okay, so let's actually take a look here. One of the things that we've been looking at over the past couple of weeks has been the US dollar Indian rupee. It backed off from that level. Remember I said, hey, if you want to see that dollar rally, we want to see that past that 83 zone and really continue. We didn't see that. It got knocked down again. However, I do think that at some point, it is going to make a decision. I mean, it is coiling up, and right now the drawdowns are getting smaller and smaller and smaller. And at some point, I think the dollar Indian rupee is going to make a big move, either up or down, okay? Which way is it? I don't really know. If I had to handicap the odds, I would say it's about 50-50. I'm not really sure, but we get confirmation of this. If this breaks to the upside, I think the dollar starts running to the upside, and then that's when we might see some more further volatility. If this actually breaks down, I do think that the dollar will also break down, and then we might see a rally happening in the market. So, the dollar is just kind of like staying there. It made a little bottom, and now it's kind of just inching up forward. Last couple of days it went down a little bit, but I think it's all really dependent on this. This will be our forward-looking indicator for the dollar. It's the U.S. Indian rupee. If this breaks out, I mean, it just from our thesis. Remember, if this breaks out, India is one of the stronger emerging markets. So if this breaks out, it means the dollar is getting. It's becoming more and more valuable against the Indian rupee. And if this chart goes up, it means the Indian rupee value is coming down, which means there's a rush for dollars coming from India. And India is one of the strongest emerging countries. If they're rushing for dollars, what do you think the other emerging market countries are going to do? They're going to go for dash for dollars as well too. So that's what I'm looking for right now. Are we going to see dash for dollars, or are we going to see a dollar dump? So I think that this chart will show us the way, okay? It will show us the way. Speaking of which, the dollar, when we're talking about the dollar, we got to talk about our other trades too, which is the silver miners. Silver actually took a little bit of a pause. It rallied a little bit, and now it's a little bit pausing. SILJ, which is the silver miners, I'm trying to get involved in that. I think this is like a little bit of a dead cat bounce, and then we're going to go a little bit lower. When we get to around here levels, around like $9 or maybe even the high 8s, that is going to be my conviction buy. Of course, we also want to see the junk bonds ADL line also make that lower that higher low, as well as the New York Stock Exchange high-low line. maintaining itself, because if not, that means there's bigger structural problems, and then we could see this keep going further down. So I don't want to be trapped in this trade. So again, it's going to be very data dependent. I want to see that dollar top off. I want to see our market internal strong as this sells off, and if that happens, boom, we're buying. Okay, so remember from last week, I moved from a price dependent entry to more of a data dependent entry on the silver miners. So keep that in mind, guys. Speaking of commodities, we're also in that trade for corn. We're in the ZCK 23. Those call spreads for May. We're still in a slight profit on these. You know, we had a little bit of a drawdown today, but I think it'll be fine. I think it's as long as it stays over, this level, as long as it closes over this right here. What is this? The close was 636.25 on the May contract. As long as it stays above that, I think we're fine. I think for the stop, you're probably going to want to stop out if this gets to around, you know, 631, maybe over here. What is this? Closing is 630.25, so around 630. So if it closes under 630, $630 a bushel, that's probably when you want to stop out. If it closes below this, all right, this day's candle right here, okay, that's where I'm going to place my stop. If it closes under that, boom, I'm out the trade. We take a small loss, we move on. Done deal, okay? So that's my risk management for my spread on corn futures. Crypto, I'm not seeing anything very crazy in crypto. I didn't see really any type of increases or anything like that in the OIs, but let's just take a look just in case. Boom, boom, boom. Sorry as I load. Okay, let's go. These days, Deribits has been kind of slow. 5.3. So it's just kind of flattening out. There's really no interesting developments happening. Somebody mentioned today that they saw a decoupling of the S&P 500 and Ethereum. That may be the case. Just remember, guys, even though they are highly correlated, doesn't mean it's a one-for-one mapping. You know, I actually think that the crypto market is more. It's more correlated to actually the junk bonds market, because I think a lot of crypto activity is funded by corporate debt or institutional debt. But you know, with the S&P 500, it's not always one-to-one correlated with the junk bonds market. There's also the options market you got to think about. You know, today we saw, or in the last couple of days, we saw the VIX really sell off. And so, you know, when that happens, especially actually the VIX 9-day, which is the short-term hedging. Short-term hedging actually, today it went up, but in the last couple of days, it's really taken a big drawdown. So of course, we're going to see, you know, as market makers have to buy back those puts, which is a short position, they're going to have to go long on the underlying to cover and make sure that they're delta neutral. We've talked about this at length many times here at Checkmate Trading. So that's one of the things, that market maker kind of activity is way stronger on the S&P 500 and in TradeFi than it is in you know, like DeFi, like in, you know, with Ethereum and Bitcoin and such. You know, the OIs, the open interest on DeFi, like in, you know, with Ethereum and Bitcoin and such. You know, the OIs, the open interest on options is still quite low. So that's that for crypto. And also too, today I wanted to share with you at the end, like I promised, a lot of people have been requesting that I do my sports lines on these market memo calls. So here we go. Here's my lines for sports right here. So who I'm looking at for is Tyler Harrow. I'm looking for 4.5 rebounds or more. And if you actually take a look at whenever he plays against Atlanta in this season, he's played against Atlanta 3 times, and every 3 times he's gotten over this line when playing against Atlanta. So they also Atlanta allows more rebounds. It's like in one of the top teams that allows rebounds to the opponents. And so I'm very bullish on Tyler Herro at over 4.5 rebounds. I don't know if the lines have moved yet or not, but if you can get in on this, I think this is a pretty good bet. I'm also going under on Scotty Barnes. He in the last 5 games, he has not gotten 24.5 points, rebounds, and assists throughout the last 5 games. I think in the last 10 games, he only hit this over 20% of the time. I'm going with the main bet for the first half. Generally, Scotty does better in the second half than he does in the first half. So my main bet is for his first half to have less than half of what that line was on the points, rebounds, and assists, going over on 4.5. I sized this bet about 2.5 times over on the full game bet. I also have a full game bet just in case if Scotty Barnes just has an amazing first half. I just don't think it continues into the second. Statistically, it just doesn't. So I have a little bit also for the full game with Tyler Herro as my anchor bet for over 4.5 rebounds. And then just in case if he doesn't get his rebounds, he usually gets his assists. So if he doesn't get his rebounds, he gives his assists. If you look at the last time he's played Atlanta, 2 out of 3 times, he's gotten over these assists as well. Okay, generally he hits one or the other. So I have that as a hedge, just in case. Okay, so that's my high conviction bets. Of course, I'm going to be doing the second half bets as I did last night and over the weekend. So I will also do second half bets, and I'll put them on Twitter and on Discord as well. I put all my trades and all my sports bets live on the Discord. So you might as well join our Discord. So anyway, that wraps up our session of the Market Memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right. Anyway, I don't know when I'm going to be back on, but again, I'm going to try to do every week 3 or 4 live airings a week. I'll try to give you guys a little bit more heads up. I know this was kind of out the fly, but you know, my schedules has been getting hectic. Don't worry if you miss it. I'll always post it on YouTube and post a link on our Discord as well. Have a wonderful day, guys. Trade safe, and I'll see you guys real soon.